What if one of the biggest opportunities in crypto has been hiding in plain sight? Not Bitcoin, not Ethereum, but a project that many investors wrote off years ago. Here's the weird part. Cardano, or ADA, has been called a ghost chain, too slow, overhyped, and stuck in development hell. Yet somehow it keeps surviving. And not only surviving, it's quietly building major partnerships, a growing ecosystem, and a community that refuses to leave. So the real question is this: is Cardano actually one of the smartest long-term crypto bets right now? Or is it just another coin surviving on hype? By the end of this video, you'll know exactly why people are still betting big on ADA and what most investors completely miss. What even is Cardano? Alright, let's start simple. What exactly is Cardano? At its core, Cardano is a blockchain, just like Ethereum, just like Solana. Its goal? To power smart contracts, decentralized apps, finance, gaming, digital identity, and basically become infrastructure for the Internet of Value. But here's what makes Cardano different. Most crypto projects move fast, build first, fix problems later. Cardano took the opposite approach: slow, research-heavy, academic. Its founder, Charles Hoskinson, who also helped co-found Ethereum, wanted Cardano to be built more like aerospace engineering than startup culture. In theory, less chaos, more security, fewer disasters. And considering how many crypto platforms have gotten hacked or crashed over the years, that idea suddenly sounds a lot smarter. But there's a catch. Building slowly can make you look irrelevant, and that's exactly where Cardano found itself. While competitors exploded in popularity, Cardano became famous for something investors hate: waiting. Promises, roadmaps, and more waiting, which created a huge divide in crypto. Some people see ADA as the patient genius. Others see it as permanently coming soon. Why people are still bullish on ADA? So why are people still investing? Why hasn't Cardano disappeared? There are a few big reasons. First, technology. Cardano runs on something called proof of stake. That means it uses dramatically less energy than older crypto systems like Bitcoin mining. It's designed to scale, stay secure, and avoid congestion problems. But the bigger story? Cardano is obsessed with peer-reviewed development. Sounds boring, but think about it like this. Would you trust a bridge built overnight, or one tested for years before opening? That's basically Cardano's pitch. Build carefully, avoid expensive mistakes, and in crypto, mistakes can cost billions. Second, the ecosystem is growing. For years, critics said Cardano had no real applications. Fair criticism, but that's changed. Today, there are decentralized finance projects, NFT marketplaces, gaming experiments, staking platforms, and governance tools growing on the network. Is it bigger than Ethereum? Not even close. But it's no longer empty, and sometimes markets reward momentum before dominance. Third, staking. This is a huge reason people hold ADA. Instead of leaving coins sitting around, investors can stake ADA and potentially earn rewards. Think of it like earning yield for supporting the network. For long-term holders, this matters, especially during boring market periods, and crypto has a lot of boring periods. Part 3. The big question. Can ADA actually go up? Okay, let's talk money, because this is probably why you clicked. Can Cardano actually make investors serious returns? The answer is maybe, but there's context. During the last major crypto bull market, ADA exploded in value. People who got in early made life-changing money. But history in crypto can be dangerous. Just because something happened once doesn't mean it happens again. So what would need to go right? Scenario 1. Crypto enters another major bull run. This matters more than people realize. When Bitcoin moves, the entire market often follows. And historically, large-cap altcoins like ADA benefit when investor optimism returns. If money floods back into crypto, Cardano likely participates. Scenario 2. Real adoption grows. This is the bigger one. Price eventually follows utility. If developers continue building, if more apps launch, if transaction activity increases, that strengthens the case for higher valuations, because then ADA becomes more than speculation. It becomes infrastructure. Scenario 3. Regulation becomes clearer. Right now, crypto still lives under uncertainty, but if clearer rules emerge in the United States, institutional money may become more comfortable entering the space, and larger projects like Cardano could benefit. But there's another side to this story nobody wants to talk about. Let's be fair, because every crypto video online seems to promise 100 times gains. Reality is messier. Cardano faces real problems. Competition is brutal. Ethereum dominates smart contracts. Solana moves incredibly fast. New chains constantly appear. Crypto changes quickly, and being technically impressive doesn't guarantee market leadership. Just ask companies that built better technology but lost anyway. Speed has been a problem. Many investors feel Cardano develops too slowly. In crypto, narratives matter. Momentum matters. Attention matters. And sometimes Cardano feels like the smartest kid in class who never turns in the assignment. That frustrates investors. Adoption still has to prove itself. The ecosystem is improving, but critics argue it still lacks enough breakout applications that everyday users care about. That's a legitimate concern. Technology only matters if people actually use it, and crypto users are impatient. So, is ADA undervalued or overrated? This is where things get interesting. The smartest investors usually ask one question: what is the market misunderstanding? With Cardano, bulls think the market underestimates long-term potential. They believe patience wins, that infrastructure matters, and when adoption catches up, today's prices could look cheap. Bears think the opposite. They believe Cardano peaked in attention, moves too slowly, and may never catch up to faster ecosystems. So, who's right? Honestly, nobody knows yet, and that's what makes ADA fascinating. It sits in this strange middle ground, too established to ignore, too controversial to fully trust, too resilient to disappear, yet still trying to prove itself, which means investors are really making a bet on one thing: execution. Can Cardano finally turn years of development into real mainstream momentum? Because if it does, things could get interesting fast. So here's the big takeaway. Cardano isn't the obvious crypto winner. It's not the fastest. It's not the loudest. And it definitely isn't the least controversial. But it may be one of the most misunderstood. For some investors, ADA looks like a sleeping giant. For others, it's a permanent maybe. Only time will tell who's right. But now we want to hear from you. Are you bullish on Cardano? Or do you think ADA already had its moment? Drop your thoughts in the comments. And if you want clear, no-hype breakdowns on crypto, investing, and where the market may be heading next, hit subscribe and turn on notifications, because the next opportunity, it usually shows up before everyone else notices.